So traders, I am back with another episode of the backtesting series. In the last episode, we did make, I think, 6.6% in the first month, but as you guys know, not every month is going to be perfect. So we're going to go for another month of testing and basically going to see the performance. If we do well, that is great. We would carry on going, but the main point of this series is to show you that backtesting isn't something that you should be scared of. You shouldn't want to try and skip backtesting and try and just trade live without any confidence in your trading because you don't have the data. I'm just showing you a simple way that I would basically look to find a new strategy from scratch and see if it's viable for further testing. Because if a strategy over 6 months, a year is losing, then it's very hard to salvage a losing strategy. But if it's making profit over a year, for example, then in my trading anyway, you can kind of fix any small errors. So maybe the drawdown's too high, you can obviously fix that. Your win rate's too low. These are things you can fix by looking at the losses and the wins. So I've started a new one. So it's going to be separate stats from the previous one, because sometimes people get too caught up in, okay, this is how it's doing in 3 months, and they look at the equity graph over 3 months, but I want to see it month by month. So each individual video on the channel, you don't have to see the previous video to understand this one. So we've started fresh on this account with 100k again, and it kind of makes it easier for people who haven't seen the first episode. That's kind of the main reason behind that. So we're going to do the exact same thing again. We're obviously going to go to New York session, and okay, so now we're going to sell. The premise of this strategy, if you haven't seen the previous video, what I'm basically doing is selling a breakout to the downside and buying a breakout to the upside at 1:30 p.m. with a 2-hour window, I'm pretty sure. The rules I created with a 1 to 2 risk to reward. So for this episode, what I'm going to be looking at is, and what we're actually going to note down, how far the trade goes into profit before then losing for my losing positions. So what I'm going to do is I have a spreadsheet here. As you see, a fresh spreadsheet, very, very plain. I'm not going to do anything fancy for now. I'm literally just going to say 1 to 1, 1 to 1.5, and 1 to 0.5. So this is very simple. We're just going to make this here and add to the left. So this is the titles. There we go. So every time price goes to a 1 to 0.5, I'm going to put a little X in here like this, and so on for these two other ones too. Obviously we know if it hits a full 1 to 2, but we can just say it in here anyway. If we just do this, so now we can see each trade, if it does go into profit, 1 to 0.5, 1, 1.5, or 2. So that's very, very simple. And you'll see why we're doing this in a little bit. So this trade here, we're going to place order, and we're going to play price on. This one went probably 0.4 pips into profit. It's a good start. It's a good start, guys. Next trade, let's go. And when I'm doing a strategy like this, just clicking through price and just entering trades on a simple strategy, you can probably tell that I'm not focused on trying to perfect everything now. I'm just trying to see if this overall idea is a good way of trading. Because if it's not, then if I have data, I can look back and say, okay, next time I'm going to test this instead. I'm not putting all my eggs in one basket and trying to force a strategy to be profitable when it's not. That's kind of the whole point. So obviously this one is a full 1 to 2, so we put an X in there. So we just make it this centered, put an X in there, and obviously if there's an X in here, there's going to be an X in all of these too. But yeah. On to the next trade now. New York session. We keep going. You guys didn't like all the clicking last time, so I'll try and avoid clicking too much. Okay, so 1 to 2 risk to reward. I was made aware that I can just set a template for the 1 to 2, but I like to have different stop loss sizes for this particular strategy, so that's why I'm doing that. Okay, that was a loss, but did we go 1 to 0.5 in profit? We actually did. So we're obviously going to tick the 0.5. So we can see that there. You see, testing something like this, it's very, very simple, and it doesn't take a lot of time to just, tally down something. That's why I'm okay with doing it. So we'll reset price here, and we go again. Play price on. Okay, so the rules for this strategy were, if price continues in the momentum on the candle, we are going to enter a position. So we're going to enter this trade here with a 1 to 2. Then we hit take profit. So obviously going to put an X in here. And obviously all of those hit too. And on to the next trade. So what you could do is actually look further to like a 1 to 2.5, 1 to 3, 1 to 3.5, 1 to 4. But that's not really what I want for this strategy. I don't want it to be a super high risk to reward strategy. That's not really what I'm aiming to do. You can see there's absolute melt here, so I wouldn't have traded that one. And most likely NFP, because it's the first Friday of the month. So we'll see what happens the week after NFP. So this one obviously is a clear buy. Stop loss below this wick. 1 to 2 risk to reward. Enter the trade. And again, TP hit. Put an X in here. There we go. So at the moment, out of the 4 trades that have got into profit, 3 of them have hit 1 to 2, which is obviously a 75% chance. We'll see if that continues over the full month or not. Again, buy a position here. And what we can actually do in this series, I'm going to ideally make it into a profitable strategy. And I'm going to show you basically exactly how I do it. And if you want to learn how I trade normally, you can see my backtesting videos. I go through the breakdowns, the confluences, everything. There's a Discord community and everything. There is a link down below to my mentorship. You guys can go and check it out. I do basically show all my trades, everything, and you can ask me questions and things like that. So this one actually went basically a 1 to 5. We actually went to a 1 to 1. But yeah, 1 to 1, because we're not going to fake it and say that it was a 1 to 5, 1 to 1.5 even, because we were actually like 0.1 pips away. But we're going to be realistic here, and if it didn't hit, it didn't hit, so that's completely fine. So obviously we have 2 X's there. Again, another melter, not going to trade that. This one actually is okay to trade. This one's not as bad. It depends on the stop loss size here. Yeah, 23 pips. It's not really an ideal situation to trade something like this. You'll notice I'm avoiding the 130 candles where it's either news or there's crazy volume like this one. And having the stop loss below the previous 1 or 2 wicks isn't advisable, especially when it's so big. I have to have a massive TP of like 45, 50 pips. It's not really what I want to be doing. The best setups are usually when it's a few pips. That's kind of the ideal situation. So we'll see if we break this low. There we go. Low has broken. Stop loss above the high. And at the moment, the stop loss is, fairly random. I'm just putting it above the high or below the low. But what I will do later down the line is measure how many pips above the high on average, because that is something good to know. So we're running this trade. There we go. TP hit, obviously a 1 to 2. So those have all filled in there. On to the next day. Another melter here. I'm not going to lie, probably wouldn't have entered on this. When you have a candle that's 20 pips on the 5-minute time frame, it's not really an ideal situation for my trading anyway. Some people like trading it, but I don't. Again, buy position here because we've broken out and closed above the high. There we go. Running in some nice profits. Stop loss hit. But did we go to a 1 to 1? See, this one's very interesting because we were actually 0.1 pips away again. like I said, if it doesn't hit, it doesn't hit. If my TP was obviously there, then I probably would have just closed it. But because I'm just being realistic for the challenge to prove that you have to basically go with everything you've backtested, I'm not going to count it. I probably would in real trading, obviously. Okay, let's see if we get a break. There we go, break to the upside. Buy positions activated. There we go. So you notice that a trade like this, where there's a bigger stop loss and a bigger take profit, it doesn't seem to... Well, actually, I'm not going to speak too soon. I was going to say it doesn't seem to win as often, but that kind of proved my point exactly. And this one obviously went to 0.5 again. Put Z in there. And we can format these. So on to the next one. So we're already 18 days through the month and only 11 minutes into the video, so this quite quick this time. Okay, so we're going to short from here. This candle's not as big as the ones that I didn't want before. I hope we get a nice melt. A little meltdown. You know, even if trades like that lose, it's good because we're still collecting data. You know, a trade like this, I'm not sure what we had on the rules, but I'm just going to close out because I don't want to hold past, you know, 6 p.m. But this trade obviously was coming in 6 a.m. We had like a few candles left. Went to 1 to 3. So we're going to count these two, obviously. You can write down in the next column the highest point the trade actually went to. That is something that you could also do. But I'm not going to do that for this one. This one's obviously a long. You know, it might seem quite stupid buying at a high like this, but this is kind of the strategy. We're seeing which setups actually work at the 130 window. So is it continuations like this where price is not making a pullback, or is it one that breaks structure after 130 and then we get into the trade? You know, which one works best? That is what we want to find out here. So this one, again, it's getting quite late. I'll probably hit stop loss. There we go. I don't think we even went to 0.5. Oh, we actually did. New York session. Okay, so technically this closed below, so we're going to have to sell. Stop loss above there. And a trade like this is so much easier for it to just hit take profit because of how small take profit actually is. And also that works the same way with stop loss, as you see. This one probably went to, you know, what I've noticed quite a few times is it's been a pip or so away from 1 to 1.5. So that's something you can notice. Okay, maybe 1 to 4 or 1 to 1.4 even is actually more profitable than 1 to 5, even though it kind of seems quite close, but that's something that could happen. But obviously we're not going to base our whole strategy off 1 month. Okay, so we're going to short. There we go. Okay, that was no profit whatsoever. And you see we started the month well, but now it's going a bit downhill. Okay, so now we're longing. Let's line this up. There we go. That one was crazy. Crazy loss. Get another massive wick, so we're going to avoid that one. Get another massive wick. Not going to trade that. Okay, we're shorting here. Stop loss basically there. Yeah. Then 1 to 2. TP hit. So we're going to put X's all across here. The best feeling when trades win. That was an absolutely crazy drop there, and I think that might be the end. Yeah. So another month completed, which is great. So we're going to go to analytics. They've moved the button. So you can see here we started quite strong. We started, we're up 5%. So up 5% in the month is very, very good. You know, we ended at 1.6% with a 40% win rate, and we lost 9 trades. So as you see, 9 losers, and the average win being 1.76, which meant we were profitable, although we did lose more than we won. And you can see the distribution of the setups here. So back onto the spreadsheet here, you can see that obviously we had 9 losses. Obviously this is at a 1 to 2. So if we just put that above here, we're going to do some calculations now. So what we're basically calculating here is the profit made for each of these kind of risk to reward levels. So we're going to just change the color of this and say total win. And you guys will see where we're going with this in a second. Just making this look a little bit prettier. So total win here, we have obviously 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 wins at 0.5%, or 12 were the total trades we took. Obviously the total trades overall were 15. So if we just write that up here, 15 total. So 12 out of the 15 trades hit a 1 to 0.5 risk to reward, which means, you know, if you're doing 12 times 0.5, we get 6. So 6% in the win column. And obviously a 1 to 1, we have 1, 2, 3, 4, 5, 6, 7, 8. So 8 wins there. And bear in mind, this doesn't actually give us the overall stats yet, and you'll see why. So we have 1, 2, 3, 4, 5, and obviously that's 7.5. And then also with 1 to 2, obviously 1, 2, 3, 4, 5, and that is 10. So now we have the basically digits for the total wins. So now we have total losses, because obviously if we win the trades, this is what we make, but we also lose trades. So out of 15 total trades, in these positions for 0.5, there were 3 left. So we lost 3 trades, which means 1% losses, that is 3% loss. So overall, 3% gain. So here we have 1, 2, 3, 4, 5, 6, 7, 8. So obviously 8 trades means there's 7 left. So that's 7%. So the overall is 1%. Here, 1, 2, 3, 4, 5. So we had 10 losses for a negative 2.5%. We can just leave the 2.5% off. And then for the 1 to 2, 1, 2, 3, 4, 5. So for 1 to 2, we obviously have 9 losses. As you see here, we had 9 losing trades. Obviously, we had, pretty sure one of the trades, one of the winners here, which actually counts as a winner for this here. So it says we obviously have 6 wins, although 5 of those were, you see 1, 2, 3, 4, 5. 5 of those were 2% wins, and one of those was a 0.6% win. So obviously this didn't count for the 1 to 2. So the number here that it gives us at 1.64% isn't what we would have actually made if we were only taking profit at 1 to 2s. So here we see we have 5 wins, which obviously makes 10% profit with 9 losses. So obviously this gives us 1% profit. So you can see overall in this 1 month period, although it looks good that we obviously made profit and we're trading with 1 to 2 risk to reward, and you probably think that a 1 to 2 would be the most profitable anyway, it's quite small. But you actually see the results, 3% profit for 1 to 0.5, because we have a very, very high win rate with that. And I'm not saying this will happen every single month, because, you know, it just might not be the case. But this month we can see, just from collecting some data, that I'd be more profitable trading with a 1 to 0.5 risk reward than I would be with a 1 to 1, a 1 to 1.5, or a 1 to 2, if my calculations are correct. If they aren't correct and you guys have seen something I haven't. I might look very stupid uploading this video, but based on my calculations, that is correct. And this trade here, or this risk reward, is the winner so far. And obviously only one of them would end in drawdown, but we now know that. So first month we made 6.6%, second month we made 1.6%. So 2 profitable months in a row with very, very minimal drawdown, in my opinion. You know, actually, yeah, 5% drawdown in a month is quite high, but like I said, if we find out the best risk to reward to use, we can then use that and test this for every single month. So if we just put April 2024 in here, I can then use this exact same system for the next 10 months. If you guys want to see that, I can copy this and replicate it every single month and see if basically the trend continues of whichever one is most profitable. So if you guys did enjoy and you want to see another episode, you know, episode 3, be sure to comment down below and I'll catch you guys next time.